All right, so in today's lesson, we're going to talk about pips and why they are so important. All right, so we're going to cover what exactly is a pip, how to calculate a pip, and why it is so important within the foreign exchange market. All right, y'all. So before we even talk about what a pip is, I kind of want to set the stage a little bit. I want you guys to think about how we measure different things, right? So if somebody is walking, we might measure how far they've gone in terms of maybe the steps they took or the miles or the feet that they've gone from the initial point that they started. If we think about time, we may measure how much time has passed in terms of minutes or hours, right? So you can think of a pip as the unit of measurement for the how the forex market moves, right? So if we take the US dollar Swiss franc, for example, that market, if it moves up and down in price, it's moving in terms of pips, right? So pip stands for a percentage in point, and like I've sort of alluded to, it's a unit of measurement to express a change in value in a currency pair. So like I said, if we take the US dollar Swiss franc, for example, if that market is moving up and down, it's moving in terms of pips. That's how we measure movements within the market. All right, so what I have shown here is just a random value that the US dollar Swiss franc might be at a given point in time. And I want you guys to pay attention to the fourth digit after the decimal place, because that is very important, especially when I show you guys how to calculate pips within the foreign exchange market. So just keep that fourth digit after the decimal place in mind, right? Because that's very important. That basically represents the ones digit for a pip, and I'll make that a little bit more clear in the example. All right, so how to calculate a pip? Well, I have a chart pulled up for you guys just to make this example clear and as concrete as possible. But here you can see I have a chart listed for US dollar Swiss franc on the 1 hour time frame. Here you can see that price is currently at 0.92853, and I would like to see price go to 0.93053. So in order for price to make that movement, right, it's moving in terms of pips. It would have to, make a move to the upside, right? So like I said, we're currently at 92853 and we want to go to 93053. So how do we measure how many pips that is? How do we measure that movement in terms of pips, right? So what I'm going to do is basically show you guys that calculation. All right, so you want to find the difference between these values in order to find the distance that you've gone in terms of pips. All right, so this just shows you that that's the distance that we are going. And here I have the target price, right? So we want to go to that dotted line that I have here, and we're currently at 0.92853. And like I stated here, we want to just find the difference, right? So the first step in terms of calculating how many pips a market has moved, or how many pips you anticipate a market to move, is you want to find the difference between the current price and the target price. All right, so when I basically perform that calculation, basically just subtracting these two values, you'll be left with 0.00200. All right, so now the next step that you want to do, and this is why I said that fourth digit after the decimal place is important, you want to move the decimal point to the right 4 times. All right, so I want you guys to pay attention to this side of the screen, because now I'm going to show you that I will move this decimal point 4 places to the right. All right, so 1, 2, 3, 4. All right, so once you find the difference between the target price and the current price, now you move the decimal spot four places to the right. And here you can see I've moved it four times. And so that equals 20 pips, right? So from this point right here, where I'm moving my cursor, to this point, that represents a 20 pip movement if the market is to go from the current price to the target price. And that's how you calculate pips. So I'm going to say it one more time. You find the difference between the target price and the current price, and then you move the decimal point four places to the right. And that will give you the number of pips for that movement. All right. All right. So now there's one exception to this rule, right? It's a little bit, the way that you calculate pips is a little bit different when you're dealing with pairs that include the Japanese yen and gold, right? I'm going to say that one more time. You calculate pips in a different way for pairs that include the Japanese yen, like USD JPY, CHF JPY. You calculate them different, and also you're going to calculate your pips differently for gold. All right, so similar example, I have USD JPY here shown for the 1 hour time frame. You can see that price is currently at 105.584, and we're anticipating price to move down, right, a certain number of pips to 105.284. So how do we calculate how many pips that is if the market goes from here to here? All right, so it's similar in that you want to find the difference between the current price and the target price again, right? So we're at 105.584. We're anticipating that we want to move to 105.284. So how many pips would that movement be? Well, you find the difference between the current price and the target price. Now, what you want to do is move the decimal place only 2 spots to the right, right? I'm going to say that again. You move the decimal point 2 spots to the right, right? And this is just for the Japanese yen and gold. These are the exceptions to the initial roll. So now I want you guys to pay attention to this place where I'm moving my cursor. You're going to see that I moved the decimal place 2 spots to the right. All right, so 1, 2. So that equals 30 pips. That movement from here to here would be 30 pips. And that is for Japanese yen pairs and gold. All right, so why do pips matter so much when it comes to the foreign exchange market? Well, this is how you make your money, right? This is how you determine your profit on a trade, and this is how you determine your potential losses on a given trade, and how you can, ensure that any loss that you take is, controlled, and you're using proper risk management. So you want to make sure that you're able to calculate pips for any trade, and that is why it is so important, right? So I'm sure you guys have noticed that I've emphasized a couple of things, and I've slowed down this lesson just because pips and understanding how to calculate pips and what they are is so important when it comes to trading within the foreign exchange market in a profitable manner. All right, so with that, thank you guys for tuning in. And if you appreciate this type of content, definitely leave a like down below, as well as don't forget to comment on any type of content that you want to see presented to you on this page. And definitely do not forget to subscribe for future content like this. So again, with that, thank you guys for tuning in, and I will check back with you guys very soon. Peace.